In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at HIMS and HERS Health. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics be at least 10%. The first pillar is earnings per share. This is where we take the net income and divide it by the shares outstanding. For HIMS and HERS Health, this is 65% for the trailing 12 months, scoring 1 point. Now let's look at the free cash flow, which is the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Here we can see they have dramatically exceeded our 10% free cash flow target, as it is up by 236%, scoring 1 point. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Their revenue is at a fantastic 62% for the trailing 12 months, scoring 1 point. Then we come to book value, which is calculated by subtracting the total liabilities from the total assets, and this indicates equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. For the last 12 months, their book value is 8%, scoring 0.5 points. Now let's turn our attention to the management of the business by looking at the return on invested capital and return on equity. These two measures allow us to assess a company's efficiency at allocating the capital under its control. For HIMS and HERS Health, the return on invested capital is -7%, and the return on equity is also -7%, scoring 0 points for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow, ideally within 3 years. We take the total debt and divide it by the free cash flow. This means it would take HIMS and HERS Health under 6 months to pay off the debt, and therefore score 1 point. With the information we have gathered, it tells us that aspects of the key pillars look fantastic, but others are giving me some red flags. So, let's find out more. Help support the channel by tapping the like icon if you have found the information helpful, and click on the notification bell to get alerts about my next videos. Now we will focus on other key pillars which help define an excellent business. So let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. This is currently at 82%, which is excellent, scoring 1 point. Next, we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Their operating profit margin is -3%, scoring 0 points. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for companies that have a free cash flow yield of 5% or higher. So, at 0.73%, this is a red flag, scoring 0 points. As potential shareholders, we will now want to look at the average book value growth for the last 10 years. This is -5%, scoring 0 points. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. The average growth for the last 5 years is 79%, scoring 1 point. In the comments section, I've included a link to the investors page and the annual report if you want to check it out for yourself. Now let's look at past historical performance to give us a better understanding of the company's successes and failures. HIMS and HERS Health has experienced notable fluctuations in its stock performance over the past 5 years. The company went public in January 2021 through a special purpose acquisition company merger, with shares initially trading around $17. In the subsequent months, the stock price declined, reaching a low of approximately $5.78 in October 2023. This downturn was influenced by market volatility and investor concerns regarding the company's profitability and competitive positioning. In early 2024, the stock began a significant upward trajectory, driven by strong revenue growth and expanding product offerings. By November 11, 2024, HIMS achieved an all-time high closing price of $27.88. However, following Amazon's announcement of a new healthcare service, the stock experienced a sharp decline, closing at $20.85 on November 14, 2024, marking a 24% drop from the previous day. As of November 29, 2024, HIMS is trading at $32.22, reflecting a recovery from the recent dip. Overall, the stock has demonstrated significant volatility, with substantial peaks and troughs influenced by market dynamics and competitive developments. Looking at the overview, we can see the current market cap is $7.04 billion. They are currently generating $1.24 billion of revenue. They have 218.48 shares outstanding. At present, their earnings per share tells us that for each share of stock, the company is generating 44 cents. Their PE ratio is 72.48, which is much higher than the S&P 500 average of about 28. The overall consensus is buy, however analysts are forecasting between 20% and 70% growth from 2025. And their price target is about $22. Now I am going to show you how to create a valuation. I will use their current earnings per share of 0.44. I use a combination of the past growth and future analyst predictions to estimate EPS growth. To create the valuation, I'm going to give HIMS and HERS Health a 20% growth rate. Then, I will assign them an estimated PE ratio of 40. After that, I will project these numbers forward by 10 years. Then, I will set the return I would like to see from this investment to 15%. This then gives me an estimated future stock price of about $109 per share. For its future share price, we then work out the current value, which Phil Town calls the sticker price, which is about $27. Then we apply a margin of safety at 25%, which gives me a buy price of about $20. Finally, now we'll summarize what we have found out about the company. When reviewing the key pillars, HIMS and HERS Health scored 6.5 out of 12, so I will give them a cross. As for the past results over the last few years, their share price has been trending upwards, so I will give them a check. Analysts are signaling HIMS and HERS Health as a buy, predicting growth between 20% and 70% over the next few years, scoring a check. Using the EPS growth model I used earlier on, the buy price is above the current price, scoring a cross. According to Morningstar, HIMS and HERS Health has a narrow moat, so I will give them a check. My final overall rating is 3.5 out of 5 stars. I have given this a category C rating within my own stock watch list, but they come with a moderate level of risk. Thank you for joining me during this stock analysis video, and I hope to see you in the next one.